Hi guys, and welcome to another Daily Bread video. So yesterday we ended our Daily Bread video at the end of my trading session at 10 o'clock. And we was kind of sitting around this sort of level after taking out that sort of Asian session high with them sort of early sellers, taking them out, and we'd left ourselves back around here. Now, coming to the end of my session, if this had been earlier on in the session, then I might look to have taken a short from this area. But because we was at around 10 o'clock, I don't really want to be sitting in that lull between 10 and 1 o'clock with my trade just moving sideways. And with our narrative for the day being that we wanted to take this sort of previous daily high, we could just go into come into that sort of New York session and push higher before moving down. So it wasn't really too advertising for me. So there was no trades for me yesterday morning. Now, on yesterday's video, I spoke about the importance of taking previous daily highs. Not only, obviously, is there liquidity sitting above, so we have liquidity sitting just above here. And obviously, if they've then shorted from here with a stop loss just above the high, we've got all these stop losses sitting just above. We also have sort of buy stops sitting just above here for people looking to break out. So that's why I wanted that previous daily high to go. We also have, if we just jump over onto this chart, I drew this pattern out for you yesterday. This is what we normally look for a swing high. We have that sort of high that comes up. We take out that previous daily high and take all that liquidity. And then our next candle sort of comes back up as a retest before we move lower. So this is the 3-pin pattern that we look for. And as you can see, we've not quite done that yet. We've had that one move up. We've had our second candle kind of just making some equal highs. So what we now want to see is probably tomorrow that sort of push up higher and take out these two candles before moving lower. But our narrative for the day at this time in the morning, obviously we was looking for this candle to push higher. So if we jump back onto here, obviously we can see that narrative of the day. And when I left the video yesterday, I said what I wanted to see is that if we was to push down lower here, I wanted to see obviously this liquidity taken from down this bottom here, deliver the discount. So the discount is from this low just down here up to this high. And as you can see, it's around about this low just here. We like to see a discount delivered to look to buy up. So we've got our discount marked on, we've got our liquidity marked on, and I wanted to see this level now come down and take this out before pushing higher. Or if we was to push higher and make that new high, then we can look to attack this liquidity down the bottom. So as you can see, obviously at the moment, we're just moving sideways, building liquidity. So we're building buy side liquidity and sell side liquidity. And what we tend to want to see is obviously that buy side liquidity taken and then attack the sell side. Or if we are going to go on a longer run to the upside, we will want to see that sort of sell side liquidity taken and then move higher like this. This is what we went through on yesterday's video, and this is how it sort of played out. So what we're going to do is we're going to just fast forward now our time to 1 o'clock, our next trading session. And during that sort of lull, we was kind of moving sideways and we started to get that sort of move to the downside around 1 o'clock. Now, what we did have here is obviously we've got this sort of liquidity being taken. We had this as the last high just here, as the last low just here. And what you'll tend to find this is where we have our smart money trap. So as smart money traders, you're taught obviously to come off the last POY, but with this sort of low down here and this discount still wanting to be delivered, I like to see these sort of lows taken out, deliver that discount before moving to the upside. So if we just jump down to the 1 minute, what you'll see is you'll start to get a lot of rejection. So a lot of people now trying to buy in. Let's just move that like this. And what we actually done was created these equal lows that we look to see run. So now we've created our equal lows. We had a little bit of reaction to the upside. So people starting to buy it. These are now our early buyers. And we sit on our hands and wait. And then we get that sort of big push down, take out them people that have bought in here or trying to buy in here. We've now taken out their stop losses that had it just below this POY. Now, we was a little bit unlucky here because I was wanting to see this sort of low go and this discount before I bought up. But as we come into 2 o'clock, we had our mate Powell speaking, that was delivering in a press conference, just talking about what they're expecting for the next interest rates and stuff. And as you can see, we aggressively pushed to the upside. Now, we was a little bit unlucky. If we had just come a little bit lower and given our entry drill, then I definitely would be buying up, because my narrative is that I want to see these highs go. But like I say, we was a little bit unlucky. So now let's just clean up our charts. All this liquidity is gone, the smart money trap. And we come down to this low, and we can leave that sort of low on. So now what have we done? What we've done is created these as equal bottoms. So now we've got this sort of range, and we've left this sell side liquidity. So now if we come back up and take this buy side, we can still target this sell side. Now, what next do we have? We have exactly the same thing. We have this smart money trap just coming into here. Oh, sorry, before I just jump on, another reason what I was looking at is on the DXY. As you can see, we had that sort of buy side and sell side. We've come back up into this PRY. So this was another confluence, is why I wanted to then long EU and short the DXY as we come back up into this level. As you can see, we was literally just short before we changed. So what I was looking at, find the right chart, is that confluence in that we've come back down into that level before moving to the upside. So now our next smart money trap is this level just here. Smart money traders are obviously taught to trade from a POY. This is of order block. So this is where the market shifts to the downside, taking out obviously breaking structure to the downside, but really we've just created equal lows. So I'm not looking to trade from here, because what we know as smarter money traders is that we have this sort of London high, and all these people this morning that was shorting down from this level have their stop losses just above here or even at break even. But we want to see this liquidity go, and we still want to see that previous daily high go. As we come back up into this area, as you can see, we get some rejection candles, so people start to short, and then we just take them out, push up higher, and now we've just created a double top, basically, near enough relatively equal highs. So let's just clean this up. We've now taken all this liquidity. So what I was looking at now is I just wanted to see that one more move push up, grab this last liquidity before shorting down to the downside. But what we actually did is kind of just play around there and move to the downside, which is absolutely fine. I'm not too bothered. I don't need to be in trades. The whole point of trading is not to be in trades all the time. Sometimes trading is literally just sitting there watching price action, waiting for the best setups. Because what happens then if that pushed up and taking you out for the thing, taking you out, taking that liquidity and taking you out, you'd have been in another loss. You could have taken a trade from this level here and taken a loss, or you could have taken a trade from here and been in a loss. Trading this way keeps you out of a lot of bad setups, and just waiting for them best setups. We only need to be taking sort of 1 trade a week, 2 trades a week max, because if we're taking the best of the best setups and we're just doing a 1 to 5 and making 5%, I would happily take that on a weekly basis and be doing 20% in a month. And then on really good weeks, you might catch 2 trades and obviously bolster that up. We obviously have our AJ strategy in the mornings at the moment, which again, if we can catch 1 trade on that a week and take 5% on that, we'll be laughing with 10% weeks. So that's why I kind of wait for the best trades. And now, obviously, as you can see, what we've done is, let's just remove this for the sake of it. What we've done is created these relatively equal lows. And now we've basically created equal highs. And now this is basically just part of our setup. This is basically our entry drill that we look for, but obviously on a slightly higher time frame, creating liquidity on both sides of the market. We now want to see that liquidity taken from either the upside and move to the downside, or if we do take that liquidity still from the downside, we can push up to the upside. So that is what I'll be looking at tomorrow. We don't really have too much news tomorrow. Let's just have a quick look. On Wednesday night, we have a little bit of odd news in the night, and some 10-year bond auction in the evening. But other than that, we've got a pretty clean day. Obviously, on Thursday, we do have the CPI data release. CPI date release at 1:30 on Thursday. That's going to be the big sort of market mover for this month. So maybe we'll just be building up liquidity till then, and then that's when we'll see our shift. But for now, what I'll be looking at is obviously taking that previous daily high, forming our 3-pin pattern, and then looking to short down. We also obviously have on Tuesday, so can we start making this sort of going into Wednesday, make that sort of weekly high, look for our midweek reversal, and then look to short down on Thursday. That would be giving us our weekly cycle as well. I think that that's pretty much it covered for today. I've recorded this video a little bit earlier. I just wanted to run through a few things, obviously hoping that people might be able to watch this video tonight before tomorrow and get themselves set up, because I don't normally post them until about 10 in the morning. But if there's anything else, as always, you can always message me, ask me questions, drop some questions in the group, whatever it may be, just let me know. I will update where we are in the morning with an updated chart, and I will try and do what I've kind of done over the last couple of days and kind of do a bit of a live feed of exactly what I'm looking at, and where to stay out and where to look at to enter the trades. So as always, I'll catch you soon, guys.